Welcome, my name is Jeff Driver, General Manager Business Development for Mirrabooka Investments. Over with me today, Mark Freeman, who's the CEO, and Kieran Kennedy, who's the Portfolio Manager for Mirrabooka Investments. Mark, we've just released our full year result after the 30th of June for Mirrabooka. The profit was up to 11.3 million, increase from 6.7 from the previous year. We also increased or showed a big special dividend was paid to shareholders as well. Do you want to comment firstly on the increase in income and then on the payment of the special dividend?
Sure, so investment income was up and we picked up a really nice special dividend from the Mineral takeover, so that was quite a big contributor. We'd also taken a nice position in Medibank in the trading portfolio, which helped, and we've been doing a bit more in the options area of the market, so selling call options, which has generated some additional income. So just in terms of when you delve into perhaps the special dividend, and Mirrabooka's got a long history of paying special dividends, and so when you're investing in mid and small cap stocks, there can be a little bit of turnover from time to time. Sometimes stories don't turn out the way you like and you get out, or a stock runs particularly hard and you can get extreme overvaluations, we might move on, or even great investments moving into the larger part of the index. We want to focus on small and mid caps. Often they generate large capital gains. So the generation of capital gains is a big part of Mirrabooka. When we produce a capital gain, we pay tax, which generates franking credits. And so we've been building this quite a large pool of franking credits within the company. We've been doing our best to get those back to shareholders over time, but it's still been growing. So again, when we look at the payment this time, it's really recognising that there is quite a significant pool of franking credits. They're valuable to our shareholders, so we're looking to get them back to shareholders, but we've still got more there to sort of help us with dividend payments going into the future.
I suppose evidence of that is we've paid 46.5 cents of special dividends over the last 10 years, so it's been quite a large benefit to shareholders.
Yeah, well that's right, and with the ordinary dividend plus the significant amount of special dividends, and you add the franking credits onto those, they're important parts of looking at the return, the total return that Mirrabooka has provided to shareholders over a long period.
Thanks, Mark. Kieran, the portfolio outperformed over the 1 year period to the 30th of June, as it has done over the 3 and 5 and 10 year period. Do you want to comment on the strength of the portfolio performance and how that was achieved?
Yeah, sure, Jeff. Look, you touched on it with a question there, but we are most interested in that long-term consistency of performance, and we're pleased that over all those timeframes we have delivered outperformance. But obviously as an annual result, we're also interested in how we've gone over the last year, and we understand that shareholders are, and it's pleasing in this period to deliver a performance of just under 18% on the portfolio return versus our benchmark at just over 14%. So some good outperformance there. The drivers of that have been in a few areas. Firstly, we've had some really good performance from a couple of newer additions to the portfolio. Firstly, Gentrack, which is a utilities software company out of New Zealand. They've been really well received in the market with some of their recent updates in terms of their trading, and it turns out we bought that exceptionally well. So the shares have recovered or performed by over 100% over the 12-month period, which is quite incredible. The other one was an IPO we took 18 months ago called IPD Group. They're an electrical distributor into the Australian market. I think they've had 4 or 5 profit upgrades since we bought them 18 months ago. Again, the shares were up more than 100% last year, so they've been really exceptional performers in the portfolio. More broadly, consistent with our long-term approach, companies like Car Sales and AUB Group have continued to deliver on really good, consistent long-term earnings growth and been well received in the share market this year. And then importantly, companies like Reece, Temple & Webster and Pinnacle Investments, they've seen more volatility in recent years, but our approach to investment is to be fundamental and long term, and we've seen really good rebound in the share prices of those, which help those results as well. I would call that one area of the market we have been underexposed in, which has actually been a headwind to our performance, and that's in the mid-cap resources part of the market, most specifically for the new electric vehicle, batteries, materials sort of companies. We find those a bit too cyclical for our long-term approach, and our stock selection elsewhere has more than made up for the headwind of not having a good exposure in those companies, which has been pleasing.
And Kieran, in terms of the adjustments made to Mirrabooka tends to have a higher portfolio turnover than some of our other LICs within our group. Can you explain the sort of background to that and what adjustments did you make during the year?
Yeah, sure, Jeff. Look, in this part of the market, you do get more share price volatility. I guess companies go through phases where there's a lot of excitement and hype at times, and you can get some stretch valuation. And you do have companies that do, I guess, they either mature or they can disappoint, and you need to work out when it's time to move on from those. So there's naturally a higher level of turnover from that. So we're always out in the market just hunting down good opportunities where we see good long-term value and good people that we can trust, and really of a sufficient quality of company that we think it's robust enough to allocate our shareholders' capital to it. So we've seen more of that through the year. Our selling this year has been more in that category of companies that some of them have been long-standing, that sort of reached a point of maturity. So there I'm talking about companies like Iris, Invacare and Ansell, which we just felt it was time. Their time was up really in the portfolio, and it was time to find some new, fresher ideas. NextDC was a company we sold because we think the growth is still good there, but we just think the returns on capital probably won't be quite as strong going forward as they've been in the past. And we have a good exposure with Macquarie Telecom in that data centre space in any case. And then in terms of finding new opportunities, I mean, this is the part of the job that we really love. We're always out looking for something new and interesting. Oftentimes it's things we've owned before, but this year we picked up some good opportunities in OFX, which is a foreign currency transactional business, which we think's got good prospects going forward. We bought into Ardent Leisure Group again. That's the Dreamworld operator. We think there's some really good value in that company, a really strong balance sheet and a good operator running it. Vista Group, which is a cinema software company out of New Zealand, which we think's got really good prospects for the next 5 years. Another interesting one's been Tourism Holdings, again a New Zealand-based company. There we've seen the recreational vehicle market that they operate in, renting out camper vans, has gone through a good period of consolidation where they now dominate the market down in this area of the world. We think that's got really good prospects going forward. And I guess the most material acquisition of all was one we have held, a company called IDP Education. They are the world leader in placing students from developing world into Western market universities. We think they've got a really, really strong position in that. There's been a bit of share price volatility on their other part of their business, and we think that's opened up an opportunity to really step that up, and it's now one of the largest holdings in the portfolio.
Thanks, Kieran. Mark and Kieran, any general comments about market conditions and expectations for the coming 12 months?
Okay, so we're probably broadly cautious on markets. You've obviously had a period where interest rates have risen quite substantially. We think that's still playing out in terms of the economic implications of that. Certainly there are pockets of the economy where there is quite a bit of pressure at the moment. Broadly, companies have adjusted to that, and it's really the nature of investing in businesses. Businesses do adjust to the environment they're in, that they're not sort of stagnant. And so certainly we've seen companies adjusting their cost base, for example, is one area that's been happening globally. But we still think there's probably a bit of a slowdown in the economy that's perhaps going to come through. There are pockets of the market where valuations are still pretty full, and we're cautious within those areas. But I guess the opportunity that the team have is when you're investing across mid and small companies, you know, there's a lot to pick and choose from, there's a lot going on, and there's always pockets of value appearing. And I guess the team's job is to keep focusing on where is value appearing within the markets. We operate within our quality frameworks, and certainly as Kieran's talked through, plenty of opportunities have opened up over the last 12 months, and they'll continue to open up going forward. So we're still very encouraged about the prospects. I guess the other end, when you look through Mirrabooka's portfolio, the largest holdings are really strong, solid businesses that we've been in generally for a very long period of time. You know, great market position, strong balance sheets, well run. So that really provides some great stability to the portfolio looking forward as well.
Kieran, you got any further comments for Mark?
Yeah, look, I think following on from what Mark was saying there, it's been an interesting dynamic. We've been a bit surprised by the strength of the equity market in the last 6 months particularly, but it's interesting looking beneath that. It's really, I think there's still a wariness out there. You know, the performance has been concentrated more in sort of mid-cap industrial companies that are well known and well liked in our space. So we think while that provides a bit of caution overall on our returns, we think the sort of discovery reward you can get for finding things like IPD Group and Gentrack, the next of those, we think exists because that wariness and that risk in the market that's still around, people are still a bit, we've seen a lot of volatility in recent years, means that there's not as many people sort of hunting down in that small cap part of the market. So that encourages us to get out there and look for that next gem that we think can drive some returns for this portfolio.
Well, Mark and Kieran, on that note, thanks for your time today. Thank you.